Back bull on the street. My name is Nicholas Coriano.
I'm
To
Dan.
my front, I guess, is
Dan Wachtel.
what up, Dan?
What's going on, Nick?
Dan told me the market was overvalued.
I did, and I will stand by that until the correction.
9/19. I just want to record the date here. 9/19/2017, 12 p.m. Dan Eastern time. Dan's telling me the market's overvalued. Why do you think that, man?
Well, I believe the market's overvalued for a plethora of reasons. More of which being that the fact that it's had a 8-year run up to, I don't know, all-time highs that now the market fundamentals are decoupled from what the actual market is, and the fact that Janet Yellen and the Fed still has to unwind $4.5 trillion worth of mortgage-backed securities that they bought. And if they screw up just one bit, you're talking about a collapse in the stock market.
Well, I oddly enough, maybe not on all topics, but have faith in the president for this because this guy knows his stuff. Not a big fan of most of his rhetoric or agenda, but in the finance world, he gets it, man. He gets it, and I think I take the position that there's always opportunity somewhere. So I think that there's a bear market, and there's always a bear market somewhere. I think that there's always a disaster scene somewhere that you can make opportunity. As a whole, do I think the market is overvalued? Yeah, I mean, it's hard to take 3%, 5% dividends or 3% dividends on these Dow Jones companies when, you remember getting 5 or 6, but I think there's opportunity here. I think that some companies are going to, keep running. I don't think that you should wait to buy Facebook. I don't think Facebook's overvalued. I think that it's a solid company that's going to keep growing, has a great management there, and is going to run up. So, I mean, the sector as a whole, if I was going to buy the whole Dow 30, probably not the best time to buy it. But I still think there's some great deals up there.
But you have market risk. So when the market corrects and we go into a bear market, all those FANG stocks are going to get taken down too. However, I don't think that they're bad companies. Now, I don't think Amazon's a bad company. I don't think Apple's a bad company, nor do I think Facebook is a bad company. Google obviously is not a bad company.
You just think it's overvalued.
I just think everything's run up way too much. And, I mean, I thought it was overvalued in 2015. I certainly think it's overvalued now. Due to their PE ratio, the individual stocks PE ratio, the fact that corporate earnings are coming in just a little bit lower than expected, and it's roaring, and now people are throwing money at it, basically because Janet Yellen, Ben Bernanke, the Fed took away any other investment opportunities that you could actually get yield from. You couldn't get yield from anything else for 8 years because interest rates were so low that it didn't make sense to invest in anything other than the stock market. So I think once they take that liquidity buffer out of the market's going to have to stand on its own. And I don't think it's strong enough to actually stand on its own yet.
Interesting. Yeah, I mean, you're definitely correct about that. One little move in interest rates, and it's gonna, like you said, the market's gonna have to stand on its own. Whether it's resilient enough, I mean, I think that the strong will survive, as Buffett says. You don't know who's. I mean, he says it in regards to credit. You don't know who's swimming naked until the tide goes out. But kind of the same model here is like, you don't know who the strongest companies are until you have to show and prove. And I think the Googles of the world, the Facebook of the world, these guys are in a prime position to take advantage. I think their growth rate, their PE ratio, I mean, Amazon's a different animal. Like Amazon's PE ratio today is different, but I think that a lot of people don't understand how fast they can grow and how fast they can scale the world and how big the actual market is. 3.5 billion people with access to the internet and 3.5 that will have access to the internet. So we're only halfway there. And these guys haven't even scraped the surface on international sales. So I think that in the next 10, 20 years here, we'll see, international conglomerates of the proportion or size that we've never seen in history before, with control over markets that we've never seen before. And I think that those companies will run up. I think Amazon is one of those companies for sure.
Yeah, but once the market gets taken down, they're not going to run up because it's market. It's you can't diversify the market. When the market starts getting taken down, people panic, and when people panic, they panic sell, and they panic sell everything. Let me just give you some metrics here, Nick. This is a couple of metrics that
Oh man, here we go. Beware of the guy with the graphs, guys.
I hate graphs. I am a value investor through and through.
Oh,
Please
okay.
do not say that I use graphs. I hate graphs, but I did use one for Bitcoin. But screw Bitcoin. Since the forward PE multiple of the S&P 500 has risen over 80% since 2011, and the trailing 12 months PE ratio of the market is 22.1, when the 10-year average is only 16.7. So Goldman Sachs, JP Morgan, everybody who's smart believes that the market is overvalued. People who want to keep putting money at risk, they can keep investing, but don't cry when you lose your shirt because you were a speculative son of a bitch and decided to keep going after the market. Just sell your winners. That's all you have to do. Sell it.
And then what? And then do what? Sit on 0% return?
No, try to find something that has value, but don't put some cash away for a rainy day, which is when the correction is. Find companies that you would buy when they come down, and when they do come down, buy them. Stock market's not that difficult. If you
Yeah,
just
I think it's easier said than done. I think in the tech sector, if someone bought an Amazon stock and the thing is run up to where it's at, markets are irrational.
right, but there's some sort of efficiency in the market. They are irrational, but if you keep your philosophy, if you don't lose your philosophy, if you have a philosophy in buying stocks and you don't break that philosophy, and you don't break away from the behavioral finance, you don't let emotions get into the way you invest, which is what a lot of people do when Facebook is trading where it's at, Apple's trading where it's at, or some people for whatever reason, because the stock went up on a Monday and it was sunny out and they smelled roses, they can't sell the stock. I don't know why that happens, but some people get stuck on stocks and they can't sell them when they should sell them.
So you're basically saying that the market is overvalued. I am basically saying that there's a deal. There's always a deal somewhere. I'm a holder of stock. So when it comes to stock, my move is I buy it and I keep it. I'm gonna keep it, and if it goes down, I'm gonna buy it again.
Right.
And I'm there for that dividend for the most part. As far as those value stocks or those growth stocks, the Apple, the Googles of the world, I buy and sell them, but it's a pain in the ass. I'm a lazy investor. I like to put my money in there and just let it sit there. And the more passive I can be, the better. But if I hold stock for some of my family members, and I'm holding on to it. I'm still holding on to it. I'm not selling it yet. And I think it can run up a little bit more.
I think buy and hold.
I do think there's an overvalued market.
I think buy and hold is the way to invest. I honestly do. But if you buy a stock at an overvalued price, like let's say you buy a stock at almost the top, but you buy a great company, that doesn't make a great investment. You just bought a good company at a ridiculously high price. That may never get to again.
It may never get to it again. That's why I always say you got to buy it down. You know, you got to buy it down. You can't just, if you think you can time the market, I mean, for exception of Dan, who thinks he can time the market.
No, I can't time the market. Only idiots think they can time the market.
Yeah, I don't think you can time the market. So I think that you always, I was gonna make a video about this on my other on my blog on YouTube. But just it's always a good time to buy. It's just a question of what you're buying. You know what I mean?
And the price of what you're getting. Because like I just said, it's not always a good time to buy. If the stock is at its all-time high, or if the stock is overvalued, if you buy a stock near the top, and I'm talking about near the top, could be anywhere like 5, 10, 15% near the top, you're now capping your gains at 5, 10, 15%, thinking that the stock's going to continue to go up forever. But buying a stock at a bad price, even if it's a great company, does not mean it's a great investment.
Yeah, it's actually a bad investment. Let's keep it there. I like that finishing statement. Join us again on Bull on the Street. We'll talk soon, guys.